What is market capitalization? As an investor, do you use market capitalization? Market capitalization is something investors can use to know what companies are good to invest in. Market capitalization may sound complex, but the concept is pretty simple. If you get on Google and search what market capitalization is, then you would beg to differ that it's simple. For today, we'll learn what market capitalization is, and you'll see how simple it actually is to understand. There are a lot of things in finance that are just way too complicated when explained. So complicated, in fact, that people who aren't in the field wouldn't even begin to grasp such concepts. It isn't the concept that's difficult, it's really just the way it's explained. We can explain what market capitalization is in simpler terms. Market capitalization, which is also commonly called market cap, tells you what companies are worth putting your money into. All you need to do to be able to get the market capitalization of a company is to know how many stocks the company has issued and multiply this number to the current value of the stock of the company. For example, a company issued 20 million shares and the value of each share is $20. The market cap of that company is 400 million. You can do this manually, but usually the market cap of a company is already listed on its data. The market cap of a company is a good basis to know how large a company is so that you know what you're getting into. Usually, big companies are more stable and have been in the market for longer. This tells you that despite whatever they had to go through in the business, they're still standing. It's important to note, though, that when it comes to big companies, the growth isn't much since they've already grown to be large companies. On the other hand, you have the companies that are just starting. These are the companies that still have a lot more to work on, which means they could have more growth. But although there may be more growth in small companies, it is a riskier choice to put your money into because they have yet to establish themselves in the market. Since they haven't established themselves just yet, failure of the company is more probable in smaller companies than in large companies. Some of the big companies are worth trillions, with market caps that can reach up to trillions or more. These are usually the popular, best-known companies. These are the companies that have been established for a long period of time and earn a lot of income regularly. These are the companies that are well known in their fields of business. Since these companies earn a significant amount, they are usually also able to pay a lot more when it comes to dividends. It's worth mentioning again that these large companies have most likely already reached their peak. So despite these companies being able to give dividends regularly due to their stability, it's possible that these dividends won't amount to the earnings you can get from small companies who can grow at a rapid progression. Then you have what you call the mid-cap companies, or rather, the middle capitalization companies. These companies have a market cap ranging from about $2 billion reaching up until $10 billion. What do you consider a mid-cap company? Mid-cap companies are those who have made a good amount of progress. They too can offer stability, but obviously not as much as large-cap companies, but they can also offer a lot of growth. Since they haven't reached their peak, naturally, mid-cap companies have to be really competitive, since they have to compete with the large-cap companies who are in the same field as them. Is it good to invest in a mid-cap company? It really depends on a lot of factors, but irrespective of a company being large, mid, or small, a good company to invest in is a good company to invest in. The classifications obviously have their differences when it comes to their potential for growth. If you want to invest in a mid-cap company, then it's best you pay attention and consider the potential for growth in the market. If their growth is progressive, then you might be looking at a mid-cap company that's on its way to becoming a large-cap company, which then will reward and benefit you as a shareholder of that company. For the small-cap companies, these range from around $300 million to $2 billion. These can also include those with lesser market caps. Small-cap companies could give you a significant amount of returns, but you're taking a huge risk since you don't exactly know if the small-cap company will continue to succeed. Small cap stocks do give higher returns on average when compared to large cap companies. If you're really a risk taker who's willing to go all out, then small cap companies are something to put in your options. If you're willing to go through a longer process, then you should consider small cap companies if you're ready to face the volatility while having possibly higher returns. For most investors, they consider a portfolio to be diversified if you are investing in all the three classifications, being large, mid, and small cap companies. If you're looking for more than stability, then large cap companies are the way to go. If you're willing to take more risk and have higher returns, then you can consider mid cap and small cap companies. The market capitalization of companies helps us decide what's a better company to invest in because it helps us compare these companies to each other. For example, you have Company A and Company B. Company A stock price is $20, while the value of the stock for Company B is $30. Given the information I just shared, can you now tell what company has more value? No, because you still need to know how many shares they have issued. Company A has 20 million shares, while Company B has 10 million shares. You'll find a Company A is more valuable when you compute this. Considering the market cap of a company is good when you're looking for what to invest in, so you can also know the size of the company that you're putting your money into. That's all for this video, eggheads. Don't forget to leave a comment below, hit that like button, subscribe, and click that notification bell to be part of our Egghead Finance community. See you in the next video.